Welcome to this deep dive.
Hi there. Yeah, today we're tackling something pretty fundamental.
Right, fiat money. It's literally everywhere. Your wallet, your banking app.
It is. The system almost everything financial is built on, but, it's not always obvious how it works or how it connects to things like financial crime.
Exactly. And we're using a really insightful article from FinCrime Intelligence as our guide today. It really pulls back the curtain on what fiat money is.
Mm-hmm. And how its design affects global finance and, crucially, why it's so central both for legitimate business and, well, for the less legitimate side, too.
So our mission here is to unpack all of that. Get beyond just the notes and coins.
Understand why this thing with technically no inherent value actually works. Look at the power it gives, the risks.
And why it's this constant battleground for regulators and criminals.
Yeah, that's the plan.
Okay, let's unpack this. So the source starts right off by saying fiat money has no intrinsic value. That feels, a bit fragile for something we depend on. What does that actually mean?
It means that dollar bill in your hand, its value isn't the paper
Okay.
and the number in your bank account. It's not valuable because of the code itself.
So where does the value come from?
Purely from the U.S. government for the dollar, European authorities for the euro, and so on. They declare it legal tender.
Legal tender meaning you have to accept it for debts.
Exactly. And they back it. Its value rests entirely on that government decree and the trust people place in that government and its stability.
So it's not about the physical thing, it's about the authority behind it, and all of us kind of agreeing to play along.
Precisely. It's a system built on collective trust, reinforced by the government's power, like its ability to demand taxes be paid in that currency. That trust is absolutely key.
And the FinCrime Intelligence piece points out that this design makes it easily scalable and highly flexible. Flexibility sounds good, but what kind of power does that actually translate to?
Oh, immense power, especially for central banks think the Fed in the US or the ECB in Europe.
Because it's not tied to gold or something physical?
Exactly. They're not constrained by a physical stockpile of something. They can directly manage the amount of money flowing through the economy, create more, or take some out.
Right, and this is where managing inflation comes in, or, trying to kickstart a sluggish economy.
Absolutely. That's their main toolkit for what's called monetary policy.
Okay.
So if they want to encourage spending and investment, maybe they lower interest rates, or they do quantitative easing, QE.
QE, right, the source mentions that. It's basically the central bank buying up assets.
Yeah, buying assets like bonds to inject cash, liquidity, directly into the financial system.
And if the economy's running too hot,
They can reverse that.
they can try, raise rates, maybe sell assets back. It's like having controls, dials for the whole economy.
It sounds incredibly powerful. But the article definitely highlights the risks, too, the potential for misuse. What's the biggest worry there?
I think the most dramatic risk, the one the source really underscores, is hyperinflation.
That often happens when a government just prints way too much money, maybe trying to paper over a fiscal problem.
So the amount of money balloons, but the actual stuff to buy goods and services doesn't keep pace.
Exactly. And when that happens, the value of each dollar or euro or whatever currency just collapses. It's not just theory. The source reminds us of historical cases where this wiped out savings, destabilized entire countries.
Wow. Yeah, it's a stark reminder that this trust-based system really depends on responsible management.
Very much so. Break that trust and the whole thing can unravel.
Okay, so shifting gears a bit, but related. The FinCrime Intelligence source obviously digs into the financial crime angle.
Mhm.
How does this fiat system, designed for regular trade, get exploited?
Well, what the source highlights is kind of a double-edged sword because fiat money is the standard way we exchange and store value.
Uh-huh.
It's automatically the main target for criminals. It's the prize they're after.
Right, the proceeds of crime.
Yeah, whether it's drug money, fraud, corruption, it often starts as cash, as fiat, or it needs to be converted into fiat eventually so they can actually use it.
To buy things, invest, make it look legitimate.
Exactly, to integrate it into the legal economy. And that necessity forces them to interact with the traditional financial system, the banks, the money transfer services, which are all built on fiat.
So that's the weak point for them. The fact they have to touch the regulated system.
That's the leverage point for law enforcement and regulators, yes.
Right.
The system itself isn't inherently transparent, like, say, some public blockchains might claim to be.
Okay.
But the regulation layered on top creates opportunities for oversight. The source goes into detail on the main tools. AML and CFT controls.
Anti-money laundering and counter-financing of terrorism.
Correct. And the foundation of that is knowing who you're dealing with. Customer due diligence, or CDD.
So banks need to verify identities, figure out the risk associated with a customer.
Yes, understand who they are and what their expected activity looks like. Then there's transaction monitoring.
Looking for weird patterns.
Basically, yeah. Using systems to flag transactions that seem out of place for that customer, or just inherently suspicious based on size, location, or other factors.
And something looks really off.
Then the institution typically has to file a suspicious activity report, a SAR, with the authorities, like the Financial Intelligence Unit in their country.
And the source mentioned other things too, I think, like tracking large cash movements.
Definitely. In the U.S., for example, there are currency transaction reports, CTRs, for cash transactions over a certain threshold, typically $10,000.
Okay.
And another big one is sanctions screening. Constantly checking customers and payments against official lists of sanctioned individuals, organizations, or countries.
To stop designated bad actors using the system.
Exactly. The whole idea, as the source explains it, is to use the record-keeping and reporting requirements built into the regulated fiat system to create a paper trail, or a digital trail, to follow the money.
It really does sound like a constant game of cat and mouse. Now, the article brings up cryptocurrencies as a point of comparison. What's the fundamental difference there, especially thinking about control and crime?
The source really emphasizes the architectural difference. Fiat is centralized,
Right. Issued and controlled by a government or central bank.
giving them that monetary policy power we talked about. Cryptocurrencies, well, many of the well-known ones like Bitcoin, are designed to be the opposite, decentralized.
Meaning no single boss.
Kind of. They run on distributed ledgers, blockchains, theoretically outside the direct grip of any one government. Their supply is often governed by algorithms, not a central committee decision.
Which must make regulating them and tracking illicit use a whole different challenge.
It does raise important questions. Some people think crypto is automatically anonymous, but the source suggests it's more nuanced than that.
Okay.
The bigger challenge for regulators isn't just potential anonymity, but the lack of those built-in choke points, those centralized intermediaries like banks that exist in the fiat world.
Because transactions can be peer-to-peer.
Often, yes. So oversight needs different tactics, focusing on the on-ramps and off-ramps like the crypto exchanges where digital currencies are traded back into fiat money.
Trying to apply some of those familiar controls at those gateways, it feels like there's a push to bring some of that central oversight into the digital currency space too. Is that where CBDCs fit in, central bank digital currencies?
But that's exactly the connection the source makes. CBDCs are basically governments and central banks exploring the idea of creating their own digital version of their fiat currency.
A digital dollar or a digital euro.
Exactly. The idea is maybe you could get the benefits of digital tech efficiency, speed, maybe even programmable money, but keep the stability, the trust, and crucially, the centralized control that comes with fiat. The source suggests this could even allow for building compliance features in from the start.
Interesting. Kind of embedding regulation into the money itself, potentially, unlike how crypto initially developed.
Potentially, yes. It's still early days for most CBDC projects, but that's part of the thinking.
So, bringing it back to fiat itself, even with all these regulations and controls, the source makes it clear there are still fundamental vulnerabilities just because of what it is based on trust, no intrinsic value. We mentioned hyperinflation, but what other risks stand out?
Well, there's the general risk of just a loss of public confidence.
Even without runaway inflation?
Yeah.
Yeah.
If people lose faith in the government's stability or the central bank's competence, you could see capital flight people trying to get their money out of the currency or the currency just weakening significantly.
Okay.
The source also touches on things like governments potentially manipulating their currency value to get an edge in international trade, which can cause friction and distort markets.
And then there are just practical system risks, right? Like a banking crisis, where maybe you can't easily access your money, even if it technically still has value.
Exactly. Liquidity crunches, bank failures, these show that the system delivering the fiat money isn't foolproof either. It all underlines the point that fiat, despite its strengths, isn't inherently stable. It really relies on good governance, fiscal responsibility, and effective central banking that people trust.
Okay, so let's try to wrap up this deep dive. Drawing from that FinCrime intelligence source, We've really seen that fiat money. This stuff with no physical backing.
Is completely foundational to how we live and trade. It works because of government authority and, fundamentally, shared trust.
We looked at the immense power this gives central banks to manage economies, a power that has both huge benefits and significant risks, like inflation if misused.
And we spent time on its unavoidable connection to financial crime. It's both the target and the necessary tool for criminals, which is why the regulated financial system, with all its AML and CFT rules, becomes the main arena for fighting back.
Then we touched on how different this is from decentralized cryptocurrencies and how CBDCs are exploring a sort of middle ground, digital but centralized.
I think the core takeaway is this tension. Fiat's genius is its flexibility and scale. It enables our complex global economy.
But its weakness, its Achilles heel, is that very lack of intrinsic value. That makes it perpetually vulnerable to inflation, yes, but also just to a loss of confidence or abuse if it's not handled carefully.
Hopefully, you now have a much clearer picture of the currency you use every single day. It's more than just paper or digital entries. It's this intricate system built on trust, rules, power.
And this constant struggle against those trying to exploit it.
So here's something to think about as we finish. Given that fiat money's entire value proposition hinges on trust in the government, trust in the central bank, what happens if that trust gets seriously shaken?
You mean by like major economic shocks? Or maybe big geopolitical shifts?
Or even the rise of alternative systems like decentralized networks that deliberately operate outside that traditional government control. If that core trust erodes, where does value settle? Where does financial authority reside in the future? It really raises some fundamental questions about the very future of money.